Okay, my name is Andrew Olga, and our project is an interesting one. It's all about taxes. I don't like it, but you can have the IRS. Taxes is what we pay, and the government says that they use that to make the society a better place. The title of our project is a world of corporate taxes. One of the taxes that you have out there is a corporate income tax, and it usually represents the largest tax cost for businesses. With this project, we plan to analyze the relationship between corporate income tax and the statutory rate of the tax. Does the cost vary across regions? Are there differences between single and progressive tax rate? The data set of the project is actually gotten from the data of the Paying Taxes Indicator of the Doing Business 2015 report published by the World Bank 2015. So I'm going to hand the mic over to Nadia so she can give some details about the project.
Hi, my name is Nadia Novik. Thank you, Andrew, for the introduction. As he has accurately mentioned, we base our data on the results of the Doing Business report, and it shows taxation as it applies to the specific case study company, allowing comparability of data. And before we go ahead with the description of analysis we plan on doing, let me introduce you to some basic definitions. So statutory tax rate and total tax rate. They do sound similar, but there is a distinct difference. Statutory tax rate is the rate described in the legislation which applies to the taxable base, and it allows you to calculate the tax liability payable. The total tax rate shows the effective rate that the company would pay as a share of the commercial profit, and it is calculated as tax liability divided by the commercial profit. Now, the payments by law is the amount of interaction that the taxpayer would undergo basically every time interaction would count with the tax authority. And the time is the amount of hours per year required to prepare and file the corporate income taxes and pay the respective liability. With this, I will pass to Sieske, who will introduce you to the regression analysis we are planning.
Hi, my name is Sieske van Hees. For the regression part of our project, we plan to focus on 3 questions. First, we'd like to see whether there is a linear relationship between the effective corporate tax rate, the response variable, and the statutory tax rate, the explanatory variable. Second, we will be testing whether the country upholds a single or progressive rate system changes the relationship between the total tax rate and the statutory tax rate. The variable single rate will be a dummy variable in this model. Third, we will throw in all the variables we think could explain the total tax rate and see which ones are of interest. Our explanatory variables are the statutory tax rate, the single rate, which is a dummy variable, time in hours, which we change into a categorical variable, low, medium, and high, population of the country in millions, which is a continuous variable, the region where the country belongs, a categorical variable, and the number of taxes paid by the company, which is a continuous variable. We will use stepwise regression in order to come to the best model. Gregory is now going through the ANOVA part of our project.
Howdy, I'm Gregory Weber, and as mentioned, we will also be running ANOVA on the data set to answer 3 key questions. These involve the statutory rate, the effective rate, and preparation time of the taxes. We want to analyze these against the explanatory variables, which have been categorized into multiple levels. For the first 2 questions concerning the tax rate, we will use the following factors. Countries are broken down into 5 categories based on population, 7 regional categories, and 4 economic groups. For the third question of tax preparation time, we're adding 2 more factors to investigate how the number of required payments and payment filing options affect this time. Thanks for your attention, and we would be happy to answer any questions you may have and welcome your feedback.
That was